All right, it's a huge week for central bank policy making. The Fed making its announcement on Wednesday. Then you got the Bank of Japan and the Bank of England. How can you make money in all this? Find out. Welcome to Trading Nation. Bill Baruch with IITrader, Boris Schlossberg of BK Asset Management. Boris, are you expecting a Fed rate hike from the U.S. Fed tomorrow? And then what would be the next most important thing globally that we should be watching for?
Definitely. We are expecting a Fed rate hike tomorrow. The Fed has been pretty confident in communicating that to the market, but that's already been priced in. I think the much more interesting question is if the Fed begins to hint that they're open to the possibility of not just 3, but possibly 4 rate hikes going forward. That should really juice up the dollar and U.S. yields, and that could be a very big trade. If they back off a little bit, I think you'll see the dollar kind of stumble at this point. As far as just the central bank trade right now, the very interesting point is that we're in the midst of a tectonic shift, completely away from QE. It looks like every central bank wants to get back to business, back to normal monetary policy. The Fed has said so. The Bank of England has said so. The big question is going to be whether the Bank of Japan is going to move towards that direction. That's going to be the interesting trade tomorrow as we look in the currency market. All right,
Bill, would you agree, or what are you watching?
No, I do agree. I think there is a little shift away from QE. You know, QE in all its glory that we know it as. But the Fed still owns $2.5 trillion of debt, and these other central banks as well. There's some less purchasing in Japan right now, and they're going to probably confirm that at their meeting. But ultimately, QE isn't going anywhere, and yields cannot rise that much, or at least no one wants them to. So what I'm looking at is the Fed really not to take the next step in saying 4 hikes at this meeting. But after they do hike tomorrow, I expect it. I think there's a little bit of a trade here that we've seen where back in December 2015, the bottom in yields and the top in prices in the 10-year came after that on the day of that hike, as well as in 2016. At this last hike, we saw a top in the prices and a bottom in yields the week of that hike. So I'm looking to buy 10-year Treasury prices on any type of dip after this meeting before the end of the week.
You know,
go ahead, finish.
I was going to say that prices certainly have been skeptical. Markets have certainly been skeptical. They're really not trading like they really want to buy the dollar or they want to, sell U.S. bonds. And that, I think, is kind of a telling sign. It may very well be sell the news type of trade as we go into the central bank meetings.
All right. Guys, we appreciate it. There's certainly a lot to do on the Federal Reserve side. Steve Leishman of CNBC will be certainly busy as well. And we'll talk to you again soon. Thank you both very much. And, folks, thank you for watching Trading Nation. I'm Brian Sullivan. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.